principal at Act One Ventures, and also the creator of the Diversity Rider, so which we'll talk about today. So thanks for joining us, Alex.
It's great to be here, Satya. Thanks for having me.
Of course. So let me share a little bit about his background. So Alex started his background. He's graduated from University of California, Los Angeles. He also is a founder, which he'll share more a little bit about his former startup. Worked at a fund out of UCLA, and then made his way to found Act One Ventures. So without further ado, can you share a little bit with the audience? What is Act One Ventures?
Sure. Well, again, first of all, thanks for having me. It's a pleasure being here with you and having a chance to share some information around our firm and the work we're doing on the Rider. So Act One Ventures, we are a 5-year-old seed pre-seed fund based here in Los Angeles, exclusively focused on investing in B2B companies. From there, we're pretty broad when it comes to what we focus on. It's easier to say the core themes that we don't touch. So we're not investing in HR tech, legal tech, or selling things that sell to hospitals. But outside of that, we'll look at most things. There's some areas where we've had really good success around fintech, compliance software, restaurant tech. But again, right, really what we are about is we're here to fund some of the best founders that are overlooked, that are coming out of industries, spending 5 to 10 years somewhere, having felt a pain point personally, bashing their heads because they need a better way to solve this problem, and then they want to go out and join this crazy world of entrepreneurship to get going. So a lot of the founders that we funded are first-time founders, meaning they might be experts at kind of the problem they're trying to solve, but all these little nuances of how do you build a company, how do you run a process, those are the things that we're here to help teach them and guide through the journey.
That's awesome. Great. And goes with the name Act One, I assume, right? The first act.
Yeah, so my business partner, Michael Silton, his wife is a theater director. So it's a bit of a homage to Hollywood and to startups being the first act, since typically we're the first institutional check in the company.
That's great, especially with the focus on the focus on LA and the entertainment industry. I thought there were a lot of layers of in terms of great naming. Switching to can you tell me a little bit about what types of startups you invest in? What size check? Of course, it's business to business SaaS, but are there any verticals that you particularly target so founders know when to call you?
Yeah. So again, we're pre-seed, seed, right? The nomenclature is kind of weird these days because of the ways rounds are becoming so inflated. But our check size is anywhere from $300,000 to $750 on the initial check. Occasionally, we'll write $1 million on the first, looking to get to about 10% ownership on that the first check that we're writing. Compliance, governance, risk, fintech, again, restaurant tech. These are areas where we've had some good expertise and good fortune investing some outstanding, diverse founders that are in our portfolio in both Fund 1 and Fund 2. But again, really, this is about just finding problems that are probably antiquated, right? A lot of these industries that are still being, built on spreadsheets, workflows, et cetera, that now need to be modernized in a cloud-based, more collaborative, better UI UX world. Because as you know, things are different. We're distributed, communication and timing of how, messages are coming across. It's just all changed so rapidly. And so software definitely is eating the world. And it's a great time because you're seeing a lot of business processes just overall changing now that software is becoming more ubiquitous. The ability to build a company is a lot cheaper now than it was, say, 15, 20 years ago. So some outstanding opportunities out here.
Great. And I want to shift to the Diversity Rider, being the creator of the Diversity Rider. And for those that are watching, Alex has created this along with his partner, and other firms have joined, including First Round Capital, Graycroft, Equal Ventures, SVB Financial, Precursor, Plexo, you name it, right? So would love to hear a little bit more. What is the Diversity Rider for those that maybe they know the VC space, but they don't understand what a rider is?
Sure.
And believe diversity is important. So
of course, yeah. So the Diversity Rider is about one of the two components that I believe are fundamental when we're talking about, making gains for, people from underrepresented communities to be able to be more visible and get more funding, right? That comes down to money and access. So the diversity rider is about the latter part of that access. At its core, the call to action is pretty simple, right? Each of us firms that have signed up to use it are making a pledge to embed the boilerplate language into our standard term sheets. And it's merely saying that at the time that we're having this discussion with any founder of any background, right, we think it's important that the same way that we need to ask questions like, how much money do you want to raise and at what price in order to issue a term sheet, along those lines of questions that should be asked should be, who in our network would be a good additional diverse investor to bring into this deal? Not because it's charity, but because it's proven now that having diverse investors, that having diverse teams will outperform. So we're spending a lot of time as investors talking to our founders about the importance of having, a diverse founding team, a diverse C-suite. Then it's about having diverse employees and then about diverse board members. But nobody has really talked about it at the most fundamental level where realistically all of the generational wealth is created, and that's at the cap table. So, in order for us to truly start to see changes in that regard, we need to put diverse check writers in the position to be able to build track records, be a part of some of the best high growth, game-changing companies by allocation, right? And so, what that allocation is, it's always dependent on the deal because each deal is different. It's going to require a different amount of money. And that's a conversation that needs to be had between the VC and the founder. But having that conversation start from the venture capitalists, in a way, what that does is it kind of levels the playing field, right? Because whether we want to admit it or not, obviously there's a power dynamic that kind of sets the stage where there's a group of people that are stewards of capital that are looking to deploy it. And then you got founders that are trying their best to become recipients of that capital. So particularly with a lot of diverse founders, it might not be that comfortable or easy of a conversation to say, hey, can we get some diverse investors in the mix, right? I mean, they're really trying to get around done. They're trying to get the money and not do whatever they can to disrupt that process. And that's understandable, right? I've been on that side of the table. I know what that discomfort feels like. But when it comes from the investor, right, when we're the ones kind of putting that forward, then we're letting them know that this is not only something that we talk about regularly, but we're putting it in practice. And so by allocating somebody from a diverse background, whatever that is, right? Black, Latinx, LGBTQ, you name it, those people are going to have a different set of skills and a different set of experiences, a different kind of network that will be complementary to the founders, complementary to the lead investor. And then it gives the founders an additional group of folks to go and tap into for all of the thousands of challenges that come across in early stage companies, which you're very familiar with, right? No one company is the same. Everyone's process is going to have a different road and different stumbling blocks. So the more people that we can bring into the mix that are allocated, right? These folks will be paying attention, not just for a cup of coffee, not just for a quick 20-minute meeting because you're someone of a diverse background and they want to, do good for the world. That's all great. But founders need that attention for the long haul, not just for 15 minutes. They need to be able to tap into these folks on a semi-regular, consistent basis. And how you get someone's attention like that is by having them be invested. Whether that's 5,000, 500,000, 5 million, whatever the amount, it varies. But the minute somebody invests, their mindset changes. It no longer is a thing of, you're coming in, you're coming out, but there's an expectation that I'd like to see a return on this investment. And I'm going to do whatever I can within my means and my time to help this founder out. So this writer is about that, right? It's about having more opportunities for folks. And, you hear a lot about people saying, well, there's a pipeline problem. I'm not seeing enough diverse founders, and hence that's why my deals are not as diverse. Well, I said, okay, well, just because you don't maybe hit it every single time on the founder side doesn't mean that there isn't another side to that equation, which is the investor side. So you can definitely do the work to go identify someone of a diverse background, bring them into the deal, allocate them, and continue to have all of your deals be diverse. You just have to be willing to think outside the box a bit and put in that work.
That's great. No, I get really excited about this because Rebel One, we're all about. We created a pretty large community of now over 100 investors, many of them women and people of color. So excited about.
Right.
I know sometimes from the other side, I will say usually the people from underrepresented backgrounds are leading either micro funds or they're just cutting smaller checks, usually get pushed out of rounds. So this is interesting dynamic to get founders to advocate for more diversity in the check writers. In your perspective, I see more often than not the ones that are dictating who is in the round and not in the round, in part is the founder, which is the agreement is with the founder, but is mostly with the lead investor, but the lead investor has a heavy hand. Is that your intent for this to be a clause that it is really for the lead investor, or can you talk a little bit more about how you intend this to change the dynamic of how VCs and founders work?
Well, by embedding the boilerplate language in your standard term sheets, right? Like that's what you're pulling out every time you're trying to do a deal. So you're making the commitment to know that this is a conversation you're going to have, and that in this particular deal with this particular founding team, we need to figure out first, how much are we going to invest and what's the amount of equity for our stake? What's the total round size? What's left over? And what can we realistically do here to bring somebody else in? That's why, the two variables were left open, right? An X for percent or dollars, because different funds of different sizes are just different. And you can't have one way that's going to work for everybody because we're structured differently. Our amounts of money under management is different, our check sizes. I mean, all these subtleties and nuances. So the writer needed to be clear enough that a call to action was, if you signed up, you knew what you were signing up for, you knew where you were going to put in your effort to, but also, not having the teeth to make it enforceable, because the point here wasn't to have, the enforcement police coming around. I wasn't going to do that, right? This is about holding yourselves and your firm accountable to the fact that we know that there's a lack of money going to, diverse founders, that, diverse investors are far few in between, at the bigger funds, that the emerging managers, are fighting to get recognized, are fighting to get, money from LPs. That whole world is opaque. It's really predicated on your track record, right? It's about who co-invested with you, who followed on, who are your LPs. Anytime you talk to LPs and raising a fund, it's always about, show me how you have access and privilege to the highest level of the people that have been doing it forever, because that's why I want to give you money. That became very clear to me over the last 5 years as we were raising our two funds, particularly the second fund. So how do you do that, right? Like, luckily we were able to get some outstanding companies in our fund one and have some outstanding top tier firms follow on. So we were able, to get to that point. But there was so much detail that went into this process. It's expensive, it's time consuming, it's exhausting. There's no playbook, there's no list that says, oh, hey, go talk to these 1,000 family offices. If you're raising 100 million or above fund, you kind of know what your targets are. But these micro funds, it's a different world. So it's a lot of cold calling. It's thousands of conversations, trying to pick up on signals while you're still investing, while you're trying to take care of your family and everything else. It becomes a lot. I'm lucky because, my partner is 20 years my elder, a fourth generation entrepreneur, 3-time founder, failed, sold the company, took one public, ran it as a public company CEO for 10 years, created a level of wealth for himself that, when he offered me the opportunity to join him to build Act One as his partner, he financed it, right? I didn't have any personal capital at risk through this process, which is what you need to get it going. So being able to ride shotgun through the development of a firm while having no capital at risk is a rarity. I'm very, very aware of that. And that's why I think I've been able to kind of learn as quickly as I have and grow as quickly as I have, because the stress of, am I going to be able to survive and have a check tomorrow wasn't there. Now, I want to make it clear, what I was making at the beginning was pennies, right? I mean, it was close to kind of like what I was making when I got out of college. But, it's the trade-off. You're going for something bigger, and so you kind of have to go through the trenches to get that done. But all of this really impacted me because I want to see more people. There should be more opportunities. It shouldn't be so opaque. It shouldn't be so dependent on existing old established networks, primarily coming from the HBS, GSBs, and Goldman, right? Those are kind of the three alumni networks that make up the overwhelming majority of finance. And even if you're an underrepresented person who finds your way into the schools, doesn't necessarily mean you come from the same wealth or privilege, doesn't necessarily mean you went to the same private high schools where they started talking about networking by the age of like 10, right? Like if you went to public schools like I did, you never heard the word finance or venture capital or any of this stuff until you arrive into your college campus. And you're kind of already at a disadvantage at that point against the other people who've been talking about it from their adolescence. So there's just a lot of these little things that nobody really talks about, but that are absolutely embedded into the fabric of how this industry works. And the diversity rider it's not a silver bullet. It's not going to solve everything overnight. I'm not delusional, and that was not the intention, but it was meant to be something that was long lasting and sustaining, right? It's not a program that ends at the end of 3 months and then we say, good luck, everybody. We're committing to do this forever, right? And if you start thinking about it that way, the more deals you do where you're having these discussions, the easier it's going to be to think about who are those people. The more time you're thinking about you and your partners and your employees about developing these networks so you can have other individuals to think about inviting. And then those effects will compound, right? Hopefully you'll start seeing even more diverse deals because when you share, people will be willing to share back. When you're giving a public signal, like by committing to the rider, that you're ready to do more for the world and for diversity, you should, that's what we all need as founders and as diverse folks, signals that you're taking it to heart, that it's not just a thing that you kind of want to put a marketing statement out, your thoughts and prayers, and let it pass on and go right back to the old style of deal making, because the old style of deal making wasn't made for folks from diverse communities to get in, right? We need to do a better job of adapting all of that.
Absolutely. And I love how you shared your, like, even with your unique path in, right? Meeting your counterpart and being able to jump in, start a fund from scratch. Also, what I'm excited about is when I think for underrepresented investors already, like this is a no-brainer, right? Like our networks tend to be a little bit more diverse just by
nature, yeah.
By nature. What I look forward to is more Greycrofts, right? Greycroft signed on, and more SVB Capitals and of the world, putting this in and really applauding the connection with Crunchbase in making the diversity of not only the founder but now the investor more public, because that is a great transparency's a great thing. I wanted to shift also. Can you share a little bit more about that story, which you began? How did you go from? Well, let's first go. You yourself have been a founder before, and can you talk a little bit about your founder journey and what caused you to start Unique Apps?
Yeah, it all kind of starts from kind of the young age, right? It's a long journey of trial and error, and the very good fortune of having people take me under their wing when they didn't have to, and opening doors that I didn't know existed. So look, to kind of start from where I came from, right? I'm a first generation Mexican American. My mom dropped out of school at 6th grade. My dad 7th grade. I grew up super poor, public schools my whole life. Went to UCLA, right? Finished up in 2007. 1 year later, the world goes to hell with the financial crisis. I lose my job in the finance world. So I started a company in 2009. I had no idea what entrepreneurship was. I just had met a French entrepreneur who lived in the Bay Area for some years working around startups. We ended up crossing paths. He wanted to do something around live streaming and media. I'd spent 3 years in college working at record labels, understanding the economic side of the music business. That's what I wanted to do. Obviously, didn't work out directly after college. So he kind of knew startups and I knew the record business, and we said, all right, let's just put 2 and 2 together. That began, since 2009 LA. It was not cool to be a founder. It was, I think that the term Silicon Beach had just been coined. There was one co-working space called Co-Loft off of Wilshire in Santa Monica. It was a very different time. So, that took us over a year to raise money. It was hard. I mean, a very different time where I definitely felt the whole pattern matching and everything, but except then this idea of diversity and equal opportunities was not as discussed. So people were more cut and dry, just kind of telling you no and never giving you reasons or being supportive. It was hard, right? So anyway, went forward, raised money, made a bunch of mistakes because we didn't know what we were doing, right? Like the money we raised, all my investors were smart, but they were not strategic to the core business, and quickly realized that raising money didn't solve our problems, it compounded them. And we just didn't come from we didn't have family networks or friend networks of founders who had done all this stuff. So there wasn't a lot of people that we could tap into that had the experience. So as I transitioned out of that and started my second business, B2B messaging for the enterprise, got offered money to move to Southeast Asia and kind of do it between there and LA. It was then that I went back to UCLA to find mentors. I was like, I'm not going to make the same mistake twice, right? I need to now find folks that have done this, that I will have some kind of commonality with them, that they'll give me like the time of day. And you go back to networks, right? So your schools, communities, whatever. I was like, all right, let me go see what UCLA's got. I figured out there was a venture fund that was within the overall foundation. I reached out to the director, Michael Silton. I told him who I was, my personal story, what I had been through, what I was doing. He shared with me his story, about being a fourth generation entrepreneur. At that time, he had just sold off his public company to a private equity firm. So he was committing to do 3-4 years volunteering to build a community around UCLA. Because his third company that he had created, he did it up in Silicon Valley. And even though he was born and raised in LA, he didn't go to Stanford, just having been in Silicon Valley, having access to that community is what opened all the doors to his best clients, the people who gave him the idea to go public, the bankers that took him public. I mean, it was 100% Stanford driven. So, his idea was this can happen around a campus like UCLA, where it has all the similarities that would make it on part of Bay Area and Boston schools, but there's no network, there's no virtuous cycle. So that pitch was like, wow, like you're pretty incredible to want to do that. At that point, I think he was the first full entrepreneur venture capitalist that I personally had ever come across. So what he was sharing with me was so different than what I heard in the past. Not that it's better, right? These are just different experiences, and I resonated better to that. So spent about 3.5 years volunteering for him. With my time, I was still running my my second company. And then in 2015, I resigned as a CEO. I wanted to move back and do my third startup. And then luck and timing, like a lot of things in life, you can be the smartest person, have all the degrees, do whatever, but you still need a little bit of luck and timing for most incredible opportunities. And, at the time he was ready to leave UCLA, and instead of starting a fourth software company, he was going to create a venture capital fund, right? B2B focused around what he knew, what we knew, community driven, investing in overlooked founders, not being exclusive to it, because we're here to make money first and foremost, but we knew because of our networks, we were going to see lots of diverse deals that other people weren't. We were going to invest in them, and we were going to support them with our community that we were building. So I was helping him raise some capital at first. And then after some months, he sat me down and said, hey, why don't you just be my partner here at Act One? So I never was like, oh, I wish I can be a venture capitalist. None of that, which is probably pretty different than most people that want to get into VC now. But for me, it was about having an incredible opportunity to build something. Again, being a founder, right? Building something that didn't exist from the ground up, being able to now have my fingerprints and the 7 years that I spent getting my face beat in, trial by fire across 2 different companies, and now doing it with somebody who had seen all these experiences and at the highest levels and was here to not only give me a chance, but to help me learn right as I was going, because my background wasn't, kind of the traditional finance, management consultant, banker. I'm just a startup guy. But, his whole thing was, you've been there, you understand that level of empathy by being a founder. We're going to be able to relate to the young folks that we're investing in, because we know what that's like and what they're going through and the challenges. So, we did our first close in Fund 1 in March of 2016. We had 10 million soft circle committed at the close. It ended up only being half, right? So nothing ever works out the way you think it is. We spent the next year raising, sourcing, investing, got to 20 million a year later. deployed all of that capital across 22 companies, and then we went out and raised the second fund of 23 million that we finished raising this past last year in October, I believe. So I've been investing out of that, and we're doing great, right? So this whole ride, I've been able to grow as a professional investor personally by being able to now be on the other side of the table and kind of see the dynamics of both sides and the gaps that are still sort of keeping a lot of diverse founders from being able to get funded. So, it's the privilege of a lifetime to be a steward of capital. I mean, when somebody entrusts you with their money, I feel like there's almost no greater responsibility than that. And, you want to put that into the hands of some incredible human beings, but that's not enough, right? Like you got to now support them with the different things that are going to come around. And we view ourselves as sort of, we're here to help you over the next 18 to 24 months. Typically, our check is not going to get you to the promised land. You are going to have to go raise a Series A. So what are the key metrics that we need to hit? How do we de-risk this business for the next stage of investors so that when you're there, we have everything in order, the right data that we need to present. You've been doing this, you have a professional firm behind you, and we're going to help you run a process and graduate you and can keep supporting you on that journey.
And how do you feel that, I mean, it's great. It's like, how do you feel that has helped you develop Act One Ventures to be a little bit different than other venture funds?
It's just, I think Michael and I, what we have together as a team is a great combination of experience, different experiences, difference in age, difference in background, how we grew up, cultures. But, because we worked together at UCLA first for 3 years when I was volunteering, we just developed this really good rapport as like founders. And I think the number one thing, when you're a founder is you need to hear the truth and not have it be covered up, because it doesn't do you any good to get, to have it sugar coated. You need to know what's happening and what's going on so you can make the best decisions. And because we've always been that transparent, it wasn't like we needed to figure out how to work together. Certainly we needed to figure out how do we balance the different things that are happening at any given moment in time, particularly when we're raising capital and investing. But kind of felt like we were like Jordan and Pippen. Obviously I'm Pippen and he's Jordan. You just kind of know who's your leader, what your role is on the team, and you're here to win championships. And that's not an individual sport, it's a team sport. So I think when founders meet us, they see that history, they see that empathy that we have, our approach that we're taking, wanting to make sure that the round size is appropriate for them, for the founder, being conscious of dilution, being conscious of what the road ahead is going to be. And we built a community of LPs and advisors around us that, if we don't have the answer to something, or if we might not know, or we don't have a story to share about how to think about it, then we'll tap into somebody in our network. So I do think that, the funds today that are coming out are incredible. There's some outstanding people with different sets of skills and, different theses. And I'm hoping that a lot of them are going to be successful because there's a lot of opportunity out here. I think there's this misconception that, and I'm a victim to that as well, before George Floyd got murdered, where you don't really see any people of color or of underserved communities, rarely, right? And so you're almost like conditioned to believe that you should feel lucky that you're in the game, and almost like, only like one or two of you are going to make it out the other side. So it's obviously naturally it's cutthroat and competitive because it's capitalism, but there's a lot of room. There's so many founders out there that are not getting looked at by some of the top firms, that if you just start developing networks around that, you're going to see some great opportunities that likely others folks won't see. You can surely have your imprint on the lives and on the company of these founders. And then if you just kind of add all the other little elements into it, then it could be a recipe for some great success. That's what we've been doing so far over the last 5 years. And so far, we've been successful at it.
Awesome. And if you're, can you share a little bit more in terms of, you've been through this journey, you created Act One Ventures, and now the Diversity Rider. Where do you see right now, and in the aftermath of, it's like with the death of George Floyd and all these protests, right? And now we're starting to pay attention to the problem of inequity for underrepresented communities, especially in venture capital specifically. What else do you see? What else can be done and should be done?
I mean, there's no one answer to that, right? It's got to be a body of work and a collection of different initiatives at the same time. So, look, I think when George Floyd came out, I knew right away, okay, we're going to see a lot. We were going to see programs being designed and scout cohorts and office hours and all these things, which are great, right? Like anything that we do to help support founders of diverse backgrounds is needed. My intention when I thought about it was, okay, well, I think there's inherently some kind of endpoint to those things, and founders are going to still need help beyond that endpoint. So how do we do that, right? And I went back and thought about like the cap table, because when you're on the cap table, you're going to pay attention. You want those updates. You want to know what's going on, and so you want to make sure that you're cognizant of that, because that's the one moment in time that as venture capitalists we can help control, right? It's hard to have control over things when once you sign the deal and things are going forward. You can embed things in the term sheet, other writers for having something around your employee hiring practices and your board practices, but those are kind of like you're hoping that that's going to be fulfilled over time by the founders. But here in this moment in time, right, that's what we do. Whether we're big or small, if we want to invest in a company, we're all going to give a term sheet. And so this is the moment where we can have an impact at the deal making process by getting people in. So, again, I don't believe that this isn't the answer to everything. I think it's going to take a combination of the other side as well, which is obviously the money aspect. And the money is really number one, because there's a lack of diverse folks who have pools of capital to invest. There's a lack of diversity in some of the bigger firms. I'm not saying there isn't any there, but it's certainly a long way from being pretty equal, right? And so it's challenging, because I think I truly believe we're all trying to do more, even if it might not seem that way. But I understand that some firms just inherently might not have been developed diverse, and so they don't have those diverse networks, and it's been a struggle for them to kind of think about how do they approach this. And I'm certainly not excusing any of them, but in my time, as I spent 3 months over the summer taking this, I was like, okay, this is going to be really hard, but I'm ready to take it on and see what I can do. As I went and had multiple discussions with GPs of different backgrounds, big and small funds, and lawyers, and all the different stakeholders that you would think that are part of the ecosystem, to get an understanding. As I was having those conversations, I was getting insights that I didn't know before, I didn't understand before. So that was very helpful to me, because it's what helped me kind of shape the writer from where it started to where it ended. Very different from that first one to the last one. And that wouldn't have happened if I didn't understand, kind of some of these challenges. And there's I feel like there's kind of like three buckets where, funds are kind of falling into. There's like the third bucket where, it's like the hardest one, right? They're not diverse inherently, which means likely their networks are not diverse, so their portfolio isn't as diverse. So they have a different challenge ahead of them than the second group. Theirs is kind of like really starts like, how do we even start to think about building diverse networks? Where do we start with that, right? Some funds were like, we don't, we wouldn't have the network to be able to fulfill the obligation of a diverse co-investor, even if we wanted to do it. So that set off the light bulb. Great, let's create a sheet on Airtable to ask diverse check writers to sign up. Because if we can create a list like that and we can share that with funds, then there's a list for them to go after and build relationships on. Okay, great. There's a second category where a good number of firms are at, right? Like you have diversity in your ranks. You might not be 50-50, but you have diversity in your ranks. You have some diversity in your portfolio, anywhere from 20% and above. And you've been thinking about how to do diversity, how to really do this in your firm. And so when they heard about the writer, it was a way for them to kind of bring their partnership together to make a commitment to something that was going to take some work. But between them, they knew that it was not something that was, out of this world. For a number of firms, when they asked me, so how do I do this? I want to do it. Help me figure out how do I do it without breaking, I don't want to lose a deal because sometimes, these deals are competitive, and especially if you're a bigger firm, how do you do it without getting it done? I said, well, how about the playbook from, emerging managers? Typically, our check isn't enough for the whole round. And same thing for us. It's competitive. When you find a great company and great team, you want to try to move fairly quickly, do your diligence, but get your money in the door quickly. Hold a second close, right? So I told them how we've had that practice from the beginning, right? We'll do a first close typically on our money, and then we'll hold a second close 30 to 60 to 90 days to identify somebody. And so there's less pressure between the founder and the lead investor because you've got your money in the door, you got around, and now you can have a little more clarity as you think about who do we round out this round with. There were some big funds that I spoke to that hadn't thought of that. So at first it was like, oh, okay, how did you not know that? But then it makes sense because, some of these bigger funds don't have the same challenge, right? They can write that entire check and take the whole round and move on. So this is, a way for them to stop that inertia of the quick deal making and be able to think, all right, we got our money in. Let's make sure that we get some diverse investors, continue to create opportunities for folks that, don't necessarily have them. And then there's like the first bucket where, you got a diverse partnership, you're all about it. Your portfolio is very strong in showing that you've been doing all the right things. You're one of the leaders, but maybe you didn't have something like this in your term sheet. And so this is just a great addition to everything else you're doing that continues to demonstrate to founders that you're one of the most progressive firms out there, understanding that in order to be the change you want to see in the world, you have to start by doing it yourself first.
Love it. So thank you, Alex, for joining us today on Rebel One Live. Applaud your leadership in the space, and thank you for sharing your journey into venture and how you are evolving venture as well. And look forward to you being an influence in the next riders to come. So thanks again for joining us. Everyone who's watching, this is Rebel One Live, Alex Guerrero. He's principal at Act One Ventures, and look forward to joining us next week. So thanks again, Alex.
Thanks a lot, Sergio. It was a pleasure.